Bloomberg Audio Studios.
Podcasts, radio, news.
This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Businessweek with Carol Massar and Tim Stenovec on Bloomberg Radio.
It is a Bloomberg Businessweek. That is Carol Massar. I'm Tim Stenovec. Carol.
Yes?
Okay, get this.
What?
I'm just doing some quick calculations here on the Bloomberg terminal because the market's closed.
Yep,
okay?
done.
Shares of GameStop up 108% in May. You can go, that's official because market's closed. This was the last trading day of May.
That's a run.
It's a run. It's its best month going all the way back to January of 2021. That was the height, of course, of the meme stock craze. The reason I'm talking about this is because the last few weeks have been really the return of the meme stocks. Not just talking GameStop here, AMC has also had its best month in years.
All right, well, we can't talk about the meme stocks without talking about Wall Street Bets, the Reddit message board that, according to our next guest, quote, would eventually come to occupy a key position at the center of a movement that turned millions of young Americans into investors and traders. It's interesting how we continue to talk about the impact of this.
That line is from a brand new book that comes out on June 11th called The Trolls of Wall Street, How the Outcasts and Insurgents Are Hacking the Markets. The book by Nathaniel Popper, a journalist and author who's written for the New York Times, the LA Times, and more, who last joined us on our program about a decade ago to talk about his earlier book. It was about Bitcoin called Digital Gold. Nathaniel, welcome back. How are you?
Great. Thanks for having me again.
Yeah, congratulations on the new book. I want to talk a little bit about Wall Street Bets because we haven't heard a lot about it in the news in the last couple of years. It was all over at the height of the meme stock craze. But I'm wondering about the lasting durability of this army of what you refer to as trolls.
It's a fascinating topic that I do think most people forgot about since January 2021, when GameStop was really in the news and you couldn't avoid it. I think a lot of people thought that this was going to go away when GameStop went down, but more than that, people thought it was going to go away when the pandemic was over and these young traders would go home. And I'm writing this book about the story of how this happened, how this sort of online movement came to be. And one of the most surprising elements of the story is the way in which it has not gone away. Mm-hmm. You look at these statistics that we now have around retail traders, and you see that retail traders are still in there buying stocks and trading at the same level that they were back basically in 2021 when GameStop was happening. So, this latest GameStop moment is just a sort of reminder of the fact that this whole world has not gone away.
All right, but it continues to play around with these stocks that, many of us question the fundamental stories here.
Sure.
So, I understand the lasting effect. It feels like a little bit like a video game and playing and so on and so forth. Is it something, though, okay, so it sticks around, but does it somehow broaden out and start to get into some names with fundamental stories?
That's a very important question for the future of the markets and for the future of the portfolios of all the people in this world, right? I think, look, on one hand, you have the importance of the meme stock movement in itself. And I think part of what's so interesting about meme stocks and GameStop is that there's something deeper going on there. People figured something out about the markets. You're right that in the end, GameStop going up was not about fundamentals. It was about social media personalities. But there was some discovery in there by the crowd of these weird market dynamics around options and market makers. And there was this sort of educational process that was happening there. It's derided as this sort of idiotic flare-up, but there was something deeper going on there. And that deeper thing taps into your bigger question here, which is that our focus on meme stocks and GameStop, I think, has distracted us from the fact that this whole movement has broadened out significantly and now is much bigger than meme stocks. And in fact, meme stocks have gone down as a proportion of all retail trading. I think what you've seen is that retail traders, they're always thought of as the dumb money. But when you're in the markets and when you're investing and when you're trying things out, you learn things. And that you have seen that over time. You see that in this data that shows the trends, the trends that retail traders are following. And as I mentioned, the percent of all trading that's gone to meme stocks has gone down, and the percent that's gone to electric cars and AI plays and Nvidia has been enormous. And so coming out of, 2022, 2023, we had this market downturn. And that was another moment where everybody said, okay, these retail guys are going to get slaughtered. They're done. You see coming out of that the retail guys were buying when the markets were at their low, and they were not just betting on meme stocks. They were betting on AI plays. And so you see this sort of interesting migration. Obviously, it's also present in the whole crypto world, and that keeps going, and that's come back in ways that people didn't expect. But
right.
The idea is this thing has gotten bigger than any one place. It's bigger than Wall Street bets, certainly.
That's so interesting, Nathaniel. But I do wonder to what extent the folks who you feature in the book, and then also the folks who just lurk in Wall Street bets, have actually made money, because there were so many stories post meme stock craze of 2021 of individuals losing fortunes, losing everything.
That is, so I think, I want to sort of split this into two halves. One of which is the sort of cultural phenomenon. And I think, losing has actually been a sort of central part of the Wall Street bets sort of culture, going back to 2015, going back even earlier. I mean, this place has now been around for more than a decade. And part of the culture was a recognition we're doing something stupid. It was about getting attention. It was part of this whole sort of 4chan trolling online culture that, by the way, I think is deeply interwoven with Donald Trump and the alt-right. I mean, all of this stuff, I sort of explain how it played, these different movements online played off each other over the years. And Donald Trump became this important figure on Wall Street bets. And part of that was this weird trolling culture where you're both joking and being serious and you're doing stupid stuff, but it's also smart at the same time. It's a very sort of complicated online world that I tried to untangle. But so that is one piece of this, and losing is a part of it. And there are, I chronicle some of these sad stories in my book, and including this suicide that really hit this community hard because of some of these losses. But at the same time, I tried to look at the data for both how Wall Street bets was doing and how retail traders were doing more broadly. And I think what you see there is a slightly different story. As retail traders have gotten into the markets, they, as I mentioned, have learned, and the markets have come to seem less intimidating. And so, the markets used to be a thing that young people largely avoided. The markets were something for old white dudes who, were retired. And now it's something that kids care about. And the big picture data shows that it's very good that kids care about the markets, because the markets are a very good place to have your money. And even if, let's say you're making, you're trying to time Nvidia or Apple, maybe you're not going to make as much as an index fund, but it's better you have your money in the markets than that you're just sitting on it, in your savings account. So that's the bigger transition that interests me.
And on some level, I feel like, Nathaniel, this is something that terrifies kind of the establishment of like, how this took off and is still around. And I think, the financial establishment trying to figure out that younger generation and how they want to trade.
That's exactly where I want to go when we return in just a few minutes. We're speaking right now with Nathaniel Popper. He is the author of The Trolls of Wall Street, How the Outcasts and Insurgents Are Hacking the Markets. The new book out on June 11th. You're listening and watching Bloomberg Businessweek. I want to get right back to Nathaniel Popper. He's a journalist and author. He's the author of several books, including the latest, The Trolls of Wall Street, How the Outcasts and Insurgents Are Hacking the Markets. There's a great excerpt from the book in the forthcoming issue of Bloomberg Businessweek magazine. That excerpt published this morning. You can read it on Bloomberg.com and on the Bloomberg terminal. And again, it'll be in an upcoming issue of Bloomberg Businessweek. Okay, Nathaniel, we got to talk about a couple of the main characters in the book here. Jamie Rogozinski and Jordan Zazera. Who are these guys?
Jamie is the founder of Wall Street Bets. He's a guy back in 2012 who created this subreddit. And at the time, it was basically an escape from his alcoholism. He was basically a 30-year-old guy working at a job he didn't really like. And he was looking for basically ways to fill his hour when he was at home drinking alone. And he began trading, and he realized that trading was much more entertaining than he thought it would be. And he liked talking about it with people. And so he created this subreddit, which he called Wall Street Bets. And what's so interesting about Jamie is that it turned out that there were a lot of other guys in a similar situation, guys who were sort of struggling in life, struggling to find their place, feeling sort of alienated. And this community grew up around him, and he found company in it, and it created this strange culture that we now know of as Wall Street Bets. By the time he got kicked out of Wall Street Bets, which is one of the interesting chapters in this book, Wall Street Bets had attracted 1 million members. And that was when the sort of next phase of Wall Street Bets happened, which was really during COVID. And that was when this young guy named Jordan Zazera took over as the sort of main moderator for the subreddit. And he is another interesting character who's never really found his place in life, never really got a job he liked. And he found this community, and he found something so meaningful and rich in it, even in all of its twisted humor and dark humor. I mean, it's a weird place, but the strange thing was this had a real hold on the people who came there, and it became a real community. And I think that's something, again, when we talk about meme stocks, it's easy to miss the way in which this feeds into this much bigger culture and this much bigger set of needs that the young guys coming there have.
So the pandemic, some people made a lot of bread, some people got puppies, some people took up crafts or some kind of musical instrument. These guys obviously got into stocks in a big way and had some fun. One question is, if the pandemic hadn't happened, would you have written this book? Would we be still talking about kind of the meme stocks and the meme stock frenzy?
I think that even before, I mean, it's fascinating. One of the chapters I tell in my book is 2 months before COVID showed up were those 2 months were the first time that Wall Street Bets realized its power for the first time. That was when they sent Tesla basically to the moon, as they put it, and in a matter of a couple of weeks. And right after that, they started experimenting around with these other stocks. They had sort of realized the power when there's 1 million people who come together in the markets and try to do something, even if they're not explicitly trying to manipulate the market, the way social media can just bring people together around an idea, around activities. So that was happening before COVID happened. And that was, in no small part because trading fees had disappeared, right? Robinhood had showed up and killed trading transaction fees, and then everybody else had to follow them. And once trading was free, it suddenly seemed a lot less forbidding. So that happened before COVID. But certainly during COVID, you went from having something like 2 million members to having 15 million members. And that was a significant growth. And that was really when we saw retail trading. It went up from sort of an average of something like $10 billion a month before COVID showed up to something like $50 or $60 billion after COVID showed up. And that's still where we are. And so we saw a 5 times leap in the amount of stocks that were being purchased every month. And that's just a big change, no matter how you think about whether it's people being stupid, there's so much complicated stuff going on there, but that's a lot of money.
It is a lot of money. And I'm wondering about, we talked about the durability of the movement earlier with you, but I'm wondering about this idea of, quote unquote, sticking it to the man. Because there were moments during 2021 where that was a big part of what Wall Street Bets wanted to do. They wanted to show those hedge funds that they were smarter. They wanted to outsmart the hedge funds that were betting against GameStop. Were they successful? Did they stick it to the man?
It's yes and no is my maybe disappointing answer. But I think that what has happened has led to a real chastening of institutional investors. Institutional investors have realized that these traders are a real power in the market when they come together. And you see this, you see this even in hedge funds complaining about the way markets keep going up, right? Even just today, we saw the markets soar at the end of the day. It feels like markets are just sort of like attached to a helium balloon. And you see hedge funders complaining about that now. It feels like all fundamentals, all rationality has gone out of the market. And I think something has changed in the way people think about markets. And so certainly, the David Goliath story, there are a lot of these little Davids who lost money, but there are really also a lot of Goliaths who lost a lot of money in this. Even when you look at just the amount of short selling that hedge funds on Wall Street do, it has just gone down. It's not as though it just went down and came back up. There is a fear in the markets, and it has changed the dynamics. And that goes back to the idea that this online community, like so many online communities, is about distrust. This alienation in American life and this distrust of the institutions. And obviously that's playing out in politics. That's playing out in the presidential election, but that's also playing out in the markets.
So where do we go from here? Chapter 17 not going away. What happens to the trolls of Wall Street? Do they remain outcasts? Do they become more establishment? Does the establishment become more outcasts? What happens?
That's a great question. I'd actually be as interested in hearing your opinion. I certainly don't have a crystal ball on this. I do think, once you see a change like this, it's like the generation that came of age during the financial crisis or during the Depression, you hear about how that just stays with them forever, right? Like that, it scars people when they go through a financial experience that is dramatic. It's hard to get away from that narrative once it's in your head. And I think that's part of what's happened here, which is that it feels like ordinary people are in the markets and should be in the markets. And I think that is going to stay with this Gen Z and probably Gen Alpha when they're old enough to get their Robinhood accounts. And many of them actually, I know so many 13-year-olds, 14-year-olds, 15-year-olds who have, their Coinbase account, their Robinhood account. It's just like a part of popular culture now in this crazy, strange way. And frankly, I don't know what that means for the markets, but I think the fact that they're not going away is something that everybody needs to be thinking about.
All right, so who plays Jamie in the Netflix series?
Let's see. I guess Paul Dano's already been taken. I think Jamie asked if Brad Pitt could play him. I don't think that's going to happen. But
why does everybody always want Brad Pitt to play them?
Because why wouldn't you?
You do not want Brad Pitt to play?
Exactly.
Right,
I want Brad Pitt to play me in anything. Having said that, are people reaching out to do something about this and bring this to life on the big screen, little screen, or whatever? And just got about 20 seconds.
I'm hoping so. It's the early in the conversations, but I'm hoping that this picture will be a bigger picture, because it's sticking around. It's not going.
He's got experience doing this too.
I know.
So yeah, Nathaniel, he knows how the game is played, I guess.
All right, good stuff always, and fun to talk about it, because we do continue to talk about it certainly here at Bloomberg. Nathaniel Popper, the book, The Trolls of Wall Street: How the Outcasts and Insurgents Are Hacking the Market.
Oh, it don't mean a thing if it ain't got that swing. Do I?
Love me a little Ella Fitzgerald. Speaking of swing, makes me think a little bit about golf. You probably, if you think about the game or the sport, you'll bring up the PGA Men's Tour, and you would be right. Yet, thanks to the pandemic, Tim, more women are engaging in golf.
Okay, check this out. The National Golf Foundation reported last year that one of the most notable aspects of the pandemic-driven rise in participation over the past 3 years has been the influx of women and girls. The organization noted that there are about 6.4 million female golfers, up from 5.6 million in 2019, with the female golfer pool jumping 15%, Carol, compared to a 2% lift among male golfers.
I have some nieces and a sister-in-law that you can add to that list there. This brings us to the Women's U.S. Open, currently underway at the Lancaster Country Club in Pennsylvania, round 2 today. We welcome back Jill Spiegel. She's president of the PGA Tour Superstore. She joins us in Atlanta. Jill, great to have you here with us on this Friday. I grew up watching a lot of golf. My dad, my 4 brothers, they were all in. I never learned to play, which really upsets me.
It's not, you can learn to
Not too
play.
late, Carol.
I know. And I do think about it.
You just need like 4 hours on a Friday. Get out there on the links.
Right after I finish this 3-hour show. You got it. Hey, Jill, what are you seeing when it comes to women engaging as a player, as a fan, and individuals who are interested in golf-related merchandising?
Yeah, well, you guys quoted a couple of the stats in your opening, and it's really fun to watch. 26% of all golfers are women, and 60%, a lot of new people came into the game, and 60% of new golfers that came into the game over the last few years have been women. So we anticipate that 26% climbing over 30 here in the near future. And what's really exciting as well is, over 40% of 18 and under golfers are girls, which is great. So that trend is going to continue. And it's really exciting to see, not only in women's golf, but in women's sports in general. If you look back just a couple of months ago with the craziness around Caitlin Clark and how that's translated into the WNBA, it's really exciting. And the women's purse this weekend at the U.S. Open is it's $12 million, wow. Almost double was just 3 years ago. Viewership is much, much higher on the LPGA, and the media consumption is 12 million viewers a week versus just 4 million a few years ago. So it's really fun to watch. We are very supportive of the female customer in our stores. In several of our locations, we lead with women's apparel. In our resort locations, we actually sell more women's apparel than men's apparel. So it's always been an important business for us, but we're continuing to really focus on it and continue to grow it. And, if it's 26% of the business, we want it to be 40% of ownership.
I want to take a step back. Why do you think more women, more girls in particular, are engaged? What is it particularly? Is there a player? Is it what's going on?
Well, you do have that. I mean, you have Nelly Corda, which has been amazing to watch this year. I know she's having a tough weekend, but she's won 6 of her last 7 tournaments. And I think COVID was really good to the golf industry in general. And I think it attracted more women at the time. People, adults were working from home, had more flexibility, and were getting out on the course. And you're seeing the demographics changing a lot, which is nice. It used to be middle-aged white men, and you're seeing, not only are you seeing more women, but you're seeing more people of color and a lot more youth. So I think it feels more accessible, more fun. It's I think golf can be very intimidating if you're new to it, and I think some of those barriers are getting broken down, and I think it's a little more casual than it was.
I'm wondering about how much that growth from the COVID era has continued. I'm a cyclist, and I think the cycling industry got a huge boom during COVID, but it is just getting crushed right now because How many bikes do people really need? I won't answer that question because I need a lot.
How many, Tim, do we
always
need?
one more is the answer to that question.
How many bikes do you have?
Too many bikes. What I will say, though, is some sports are not seeing that bump continue. What can you tell us about golf?
Well, it's a really good question. And, you quoted some stats from the NGF and we look at it closely too. And 2023, 2020 and 2021 were record years. And the last 4 years, rounds of golf have been at an all-time high, with 23 at a peak. Over 530 million people, rounds of golf were played. And participation was almost 27 million. And in 2024, rounds of golf are up over 2023. So we were all holding our breath. Our business doubled during COVID, which is tremendous. And we were thinking, when is the air going to come out of this balloon? And it really hasn't happened. The industry has never been healthier. And what's exciting to see too is not only are people playing golf on the golf course, more people are actually playing off-course golf. And when I talk about off-course, what I mean is simulator golf. They're either going into a 5-iron or a Top Golf. And 10% of those people are converting to green grass golf. So it's the growth continues. And you're right, there's a lot of sports that saw a huge spike during COVID and they're regressing down in golf. Recreational golf has never been happier, healthier. 1 in 9 people are playing golf. And the beauty of it is all ages can play, all abilities can play, and you can play together regardless of your skill level.
So if you
That's how the game is set up.
Is there any correlation if you play a lot of miniature golf that you actually
the putting, the short game?
Golf?
Are you kidding? The short game, of course.
I'm just
wondering. Your putting will be very good, and but it's people who used to go to Top Golf, and Top Golf has been very good for our sport.
Yeah.
They'd go to Top Golf and it was food and beverage and entertainment, and then they'd go home. But now it's people are sparking an interest, and we're seeing in our business, the technology business is really, really healthy. And the simulator business is healthy. And, there's a launch of an interactive league starting this January with professional golfers called TGL. And you're going to see that 24 of the top players on tour playing simulator golf down in Florida on Monday night.
That's really cool.
There's this whole resurgence of different ways you can take in the sport. And simulator golf doesn't take 4 hours. And you can play it in a couple hours or an hour even. So it's opening it up and making it more welcoming, without the time commitment.
What's just 30 seconds? What's the line you can draw from the popularity of Top Golf to people actually going out and playing golf more?
The line? Well, I think people are more comfortable. They get a taste of it. They know that it's fun. And they're like, I'm going to give it a try. So it's, like I said, we never saw that conversion before. And for 10% people, 10% of fun golfers going out and actually taking up the sport, that's gonna be a lot more people coming into the game and growing the game.
Really interesting. Well, listen, good luck with the tournament and everything this weekend. Really great to get some time. Have a great weekend. Jill Spiegel, she's president of the PGA TOUR Superstore, joining us from Atlanta. $12 million purse.
Let's go play some golf.
I know. It's the one thing I regret not having learned with my dad. I know it's
You could
never
go
too
learn
late.
now.
But my understation is he was a great teacher, so I can't do that.
Yeah, that's true.
All right. You're watching Bloomberg.